Welcome to the September 2023 edition of the Pre-Sale Pulse, a real estate show dedicated to everything happening in real estate across Metro Vancouver and the Fraser Valley. I'm your host, Ryan Ledingham, and folks, give it up to MLA's marketing whisperer, Susana Gonçalves.
Hey, Ryan, thanks. I hear we might have a special guest joining us today.
Soon. Any moment. Pending.
Pending.
You bet. Scott Jingles from Nest Mortgage is going to be joining us shortly to share some insights trending in the mortgage space. I think let's get amped up on the conversation and jump into a little bit of market intel.
Yeah, so what's new in the exciting world of macroeconomics, Ryan?
So much. I think any economics nerd in the audience is going to know this. This week was essentially the Super Bowl of central banking. Policy leaders from around the world gathered in Jackson Hole Symposium, an annual conference held in Wyoming.
Yeah, normally I would say this isn't nearly exciting as the Super Bowl, but these days it's big news around here. What were some of the key takeaways?
Thanks for asking. The overall message seemed to be we've done most of the work necessary in the fight against inflation, and we're nearly there. That's a huge positive right now. We've covered 90% of the ground. That's been the general sentiment. Inflation has already come down dramatically. The expectation is that the trend is going to continue. At the same time, the last 10% is perhaps the most challenging and the most precious.
Yeah, indeed. We've come from over 9% inflation at its peak to just about 3% in the last few months, but getting to 2% from there may be equally challenging. The bankers mentioned that there is a good chance that we'll see at least one more hike, quite possibly before the end of the year.
And that played out here at home as well, where in September we saw that the BOC did actually hold rates. We deem that as very positive news. And on that note, why don't we invite our special guest to this episode, Scott Jingles, Nest Mortgage, to hear from his perspective. Scott, welcome.
Welcome to the Pre-Sale Pulse.
Thank you for having me.
All right, we got to ask this question. We're going to talk a little bit about rates and a little bit about inflation. First of all, though, you got to tell us about Nest, the services you provide in the real estate industry.
Well, thanks again for having me. Yeah, simply put, we specialize in pre-sale mortgages. As the pre-sale journey can be a little more cumbersome or different from the traditional resale financing, Nest is your source for a simple, competitive, customized pre-sale mortgage.
Love it.
Now, looking at the year in review, where do you see interest rates and supply of capital in our industry heading for the rest of the year and into 2024?
Over the past year, like a broken record, the Bank of Canada has honed in and focused on inflation. Every economic data point has been scrutinized as they push towards that 2% CPI. Although there is still uncertainty around near-term rates and whether or not there's going to be another hike, in the long term, the consensus is that there are lower rates on the horizon. Markets and banks are predicting rates to ease by July of next year. Rates might ease as much as 2%, which will be excellent news specifically for pre-sale buyers. With regards to the supply of capital, banks are eager to lend, but the gap between income and mortgage payment has widened considerably. Payment shock is trickling through as we head deeper into the mortgage renewal cycle. Although capital is available, higher rates will continue to slow activity until those payments and interest normalize.
So if you can qualify, you can find someone to lend. And if you are needing a bit of relief, July next year, maybe we'll start to see some change.
Yeah. Scott, I got to ask another question that I think a lot of our viewers are going to have. It pertains to where the credit is flowing from. So as you know, a lot of banks have been truly tightening their belts and they're becoming very selective now on who they lend to. That's something that we've talked about many times recently. Are you seeing any increase in purchasers choosing to work with specific private lenders or alternative lenders in order to get over those financing hurdles?
Absolutely. With the challenges the borrowers are facing today, tighter credit, higher liquidity requirements, and obviously that overarching the stress test and tougher qualifying guidelines, a borrower today qualifies for 20% less mortgage than they did just a year ago. So due to these challenges, we've seen a dramatic shift. We're doing a lot more Alt-A mortgages, a lot more private mortgages, where more down payment or that cosigner isn't available. It's trending for sure.
What's a little bit exciting about what you just shared, though, is potentially up to 200 basis points starting potentially next July over the next 24 months. And that would obviously be maybe the more extreme end, maybe even closer to 100 basis points through 2025. what you're saying then really is that 20% lack of affordability that was a result of higher interest rates, we might see that ease and maybe drop down around maybe 10%, right? So roughly half of those increased costs that have been obviously pushed into the marketplace over the last 12 months as a result of rate hikes.
Okay, so with rates higher than desired, what products and terms are borrowers considering when purchasing today, given the changing landscape we're in?
Yeah, it has been a changing landscape. Earlier this year, there was an opportunity to secure a shorter term fixed rate, like a 3-year fix at really discounted pricing. But now, given that we're pushing that 6% threshold, regardless of the term, 3, 4, 5-year term, we're starting to see a shift towards a variable rate mortgage. The variable rate mortgage gives you an opportunity to, even though it's a higher rate initially, it gives you the option as we push into July next year to possibly lock into a lower fixed rate and secure longer interest rate savings.
I think what's really interesting about that, Sharon, and it certainly overlaps with your previous point, as you see potential unwinding of interest rates over the next 24 months and potentially starting as early as July of next year. You know, you were mentioning 20% less affordability in the marketplace because of higher rates. As they unwind interest rates, you're seeing affordability come back in. And it looks like, from our perspective, and Suze, you could jump in here, but it does feel like the market has set a new price point with interest rates today. We have a lot of transactions in resale. It seems like prices are established throughout the Lower Mainland at higher rates. So it's hard not to imagine how prices don't continue to bump up as we begin to unwind interest rates as a result of trying to hedge inflation.
Yeah, I think given what we've been through, the fact that we haven't seen significant decrease in prices through this period as rates have come up and we've potentially hit our peak or very close to our peak, I think as it comes down, it feels only obvious that we're going to see a bunch of demand, come back into the market. People are holding right now on their purchases because they're worried about what they can qualify for. But those people will jump back into the market. We'll see activity, and construction costs aren't getting cheaper. We still have supply constraint issues. We can't bring on product fast enough because of the timelines we have in the city. So it really lends itself to just another price run in future.
And from what Scott's sharing today, it sounds like you can expect it to start to kick off come July 2024.
There you go.
Scott, thanks for joining. We really appreciate the perspective. What we want to leave our viewers with is maybe a few specific key takeaways that they can take into their search for real estate. I think the first is, after a spat of positive inflation reports and macroeconomic data, analysts really are now tentatively once again predicting a soft landing, which is a really nice shift. I think by all accounts, the market and most of the charter banks, it seems, as you're sharing, are predicting lower rates coming as early as mid-2024. The second is, alternative and private mortgages are really available to those borrowers feeling the credit crunch today if they have to make a purchase. And maybe last, just contact Nest, right? If you're looking for a perspective, maybe understanding how your current rates stack up to what might be available on the market, or you're just looking for a second opinion on where the market's going, sounds like you can put your hand up and give some great guidance.
Thank you for having me. It's been great to be here, and absolutely, we'd love to help. Contact us at nestmortgage.co, and we'll talk to you soon.
So moving now to the pre-sale market, after a pretty typical slower August, it looks to be really gearing up for a very busy fall season.
There is so much riding right now in the coming months. Several developers have already had ready-to-go programs for months, in some cases years, finally ready to push that into the marketplace. The previous months of strong and stable price appreciation in the resale market, improvements in the probability of soft landing, as well as the most recent pause in interest rates at the latest BOC meeting, that's all giving developers much needed confidence to trial potential programs right now.
Yeah, and the market we're seeing this most is Burnaby, specifically Metrotown. We're tracking a total of 6 concrete towers that may launch in the coming weeks and months, right?
Yeah, and you have some incredible names here that are pushing into the market. We have the likes of Bosa, Concord, and West Group as well. Obviously incredible programs, many of them with height. Citizen, Rain, Solhouse, 6035, you got Greenhouse, Icon at Southgate Village, and Riviera on the park.
Yeah, now due to the amount of activity in this market, we're actually doing a special feature trending topic video. We'll be going over things like differences between the programs, pricing, and overall expectations for absorptions. Make sure to check that out.
I think the point is that our viewers are really excited to follow these markets, and they're going to be key indicators for what's going to happen in the winter and early spring months next year. Now, overall, Suze, I think whenever we see a flood of product into the market like this, it's always important to note the different motivations and priorities of each developer. We're going to see that in pricing and incentives. The differences in priorities really dictate how each sales program will run and their positioning in the marketplace.
Yeah, you're right. And we have had firsthand experience of this in Coquitlam, the last market that we saw sort of a surge of activity like this. Gardenia by Intracorp came to market with pricing that was a bit under what, in our opinion, Gardenia could have probably really achieved, but that was their strategy.
Yeah, I think that that's very accurate, and what was an intentional move, undercutting the broader market to have strong absorptions at their first tower in order to really increase the interest of subsequent towers. Now, this is a strategy that some of the larger scale developments, especially when they're a little bit risk adverse or cautious, are able to employ. Now, to the detriment of smaller programs, more aggressively initially, and maybe make up revenue in the back end of the program.
Yeah, and we're hearing that at Debut at Fraser Mills is taking a similar tactic right now with their first release due to the amount of inventory they'll have over time. Now, this has several knock-on effects for competition in the area, and it will be interesting to see if we see someone take on the sales absorption strategy in Metrotown with the amount of competition coming at the same time. Another good example is a developer like Anthem, which has a volume-focused development strategy. They have an emphasis on successfully completing a broad portfolio of programs.
I think relative to the other developers, Anthem marks their successes by absorption rather than maximizing every dollar of revenue. I think the subsequent sales experience is also very different.
Yeah, now 6 different concrete towers, 5 different developers this fall in Burnaby. Again, we encourage our viewers to check out the featured topic for a deeper dive. Now, before we jump into our project features, we mentioned earlier our learnings from the Coquitlam market. We're excited to announce we've taken some of that experience to bring you our newest exciting project coming this fall, Lodana by Circadian Group.
Yeah, this is an exciting one. This is a highly anticipated project in the area, Suze, with 123 condos and townhouses, retreat-like amenities. We've heard that many times, but I think that many of our viewers, if they visit the PC, they're going to be very, very excited about what's to offer. Starting in the low 400s, our exclusive realtor event is already fully booked due to the demand, but if you missed out on that, please contact our sales team for the other preview and opportunities. Lots to come. Just a reminder to check out any of the notes in the links below. Now, the market is obviously headed right now for a major test of depth over the coming weeks, Suze, as you've shared. 6 major concrete towers, iron launches in Metrotown, one of the biggest releases of supply that we've experienced in the last 24 months. The combination of returning fall market as well as the recent BOC rate pause is expected to really drive a robust absorptions for pre-sale programs obviously coming.
So all right, it's time for project features. We're keeping project features short and sweet today as we will be focusing on all the Metrotown launches in our trending topic. However, we still wanted to quickly mention one particular project also coming up in Burnaby, but not in the Metrotown area. Instead, this project is coming up in Brentwood, where activity has been a little quieter these days.
Now what we're talking about, none other than Etoile Gold, the last and anticipated to be the most impressive building in the Etoile master plan. Now Etoile Gold will offer 277 units ranging from studios to 3 bedrooms, including a few 3-bedroom townhouses, those done in concrete.
They're well done with the French accent there. With a name like Etoile Gold, they're really focusing on marketing themselves as a luxury condo, citing that the tower has been inspired by world-leading hotels and offers 5 levels of amenities.
You know, Suze, I was having a really hard time understanding, is now the right time for them to be launching?
Yeah, on one hand, we're seeing much less competition in Brentwood today than we were a few years ago. However, it seems that all the focus these days is on Metrotown and all the new launches coming up around that area. Now, it will definitely be a bit tricky to get attention, but I think it may come down to a pricing strategy. If they can show good value against some of the higher-end Metrotown stuff, given the 2 markets have been operating close to par recently, I think they have a chance to sway some buyers.
I think the interest in Brentwood is still there. This is seen obviously with Anthem's South Yard's launch of Tower A back in January, which has a sold out message already. So the real estate question is, how much will the upcoming projects in Metrotown dilute the interest in Brentwood?
Yeah, absolutely, especially when the competition in Metrotown is coming from a lot of big name developers like Bosa, West Group, Concord, and Anthem. It will definitely make the competition a lot more intense.
Yeah, and you know what? I think a really big draw, as you already mentioned, is there's a lot of purchasers in Brentwood are having amenities of the amazing Brentwood literally right at their doorstep, right? That's been such a big driver. The way that that's reshaped that entire community's perspective around amenity and activation is special. And I guess that shouldn't really be underestimated at this point.
Yeah, I'm definitely excited to see how the Burnaby market plays out in the fall. Now for our market's finger in the wind, resale stats.
Love it. Let's jump into that. I think following the typical sales patterns of summer months, we are seeing a 5.7% decrease in sales for the month of August when compared to July. Not unusual. And that brings us to around a total of 2,200 transactions, just under 2,300.
Yeah, between the typical summer slowdown and increased rate hikes back in July, we really saw that reflected in the numbers this past month.
I think still to be around 2,300 transactions, though. Still a very strong summer month.
Great.
I would also definitely say that they've contributed to the dwindling sales. However, even in the increased cost of borrowing, we are still seeing 21.5% more sales than when compared to August of 2022. Additionally, when you really look to analyze the numbers, it's becoming clear that the decreases in sales activity is likely correlated to the decrease of supply in the market as well.
That's right, Ryan. There were just over 10,000 active listings in August. Even though that is only 2% less than the previous month, of these active listings, only 4,000 were actually new listings, which is a 15% decrease from July.
That's a massive number if you're in the resale marketplace looking for a new home. That's definitely interesting as well, because you would assume it's reasonable that benchmark pricing will see increases if supply remains low. Now, especially as we approach fall, which is the typical time for sales activity to begin ramping up again.
Yeah, and I think this is further supported by the fact the sales to listing ratio was 24% for both the months of July and August, meaning demand relative to supply hasn't actually decreased from what we were seeing. The ratios for townhomes and condos sit at 30 and 32% respectively, which indicates that we still remain in a seller's market despite decreased sales activity, although that number has been on the decrease from the peak of this year in May.
Right. And that's just so incredible, right? 11 base point increases in a very short period of time, and we are still sitting in a seller's market as we try to curb inflation.
Now, we can't talk about supply without mentioning pricing. How's that looking?
Benchmark pricing has stayed relatively stable over the past 2 months. We are currently sitting around $1.2 million, which represents a 0.2% decrease from July, but a 2.5% increase from the same time last year.
Yeah, and in fact, most areas across all product types are in positive pricing territory year over year. Although the pre-sale market will be active this fall, I am expecting the resale market to remain slightly muted from the spring, so it will be interesting to see how the fall plays out on the resale side.
So Suze, despite slight decreases when compared to the previous month, August is still seeing a relatively stable resale market. While sales actively have decreased, new supply in the market has decreased even faster, and this could lead to a large imbalance between supply and demand. That's an imbalance that we've talked so much about over the last 3 years. Fall usually marks the start of the new and busier season in terms of real estate market, so it's important that we have a really steady supply to fuel the momentum. Otherwise, we can expect prices just to continue to run rapid. I think that's a wrap.
Absolutely.
It looks like that's another episode of the PreSale Pulse. Now, hit the subscribe button so you never miss an episode. And if you haven't already, be sure to check out our newswire. That's a daily email roundup of all and everything breaking, trending, newsworthy in the world of real estate.
Thanks for tuning in, everyone, and we'll see you next time on the PreSale Pulse.